One of the biggest challenges many business owners struggle with is customer retention. It's not uncommon for businesses to lose between 18 and 22% of their customers every year to attrition. This is called churn rate. It's the number of customers who are no longer doing business with the company. Now you can calculate your own churn rate for your business by dividing the number of customers you've lost by the number you started with. For example, let's say you start with 1,000 customers and 100 leave you. Your churn rate then would be 10%. Now, this is an important number to know because in the majority of cases, most business owners or managers have no idea why their customers are leaving. Of course, people stop doing business with certain companies for several reasons. A recent study by Marketing Resources International showed that 1% of the people who stop doing business with a company stop because they die. 3% move away, 5% develop other friendships, 8% outgrow their need for the products or services the business sells, 12% quit because of dissatisfaction with the product or service, 14% just got out of the habit from buying from the business, and a whopping 57% stopped patronizing the company because of an indifferent attitude, a bad experience, or they were offended by an employee. Knowing this information, it would seem to me that a business owner who is serious about the success of his or her business will want to know how their business stacks up to these percentages. But unfortunately, most companies don't have any type of exit interview in place to determine how they compare, what went wrong, what may need to be corrected, or to see if there might be a way to save the business. And with no way to determine that, far too many companies are losing tons of money each year to attrition. And much of that attrition, as we've seen, comes as a result of the way a customer was treated. Now, the TARP organization released a study that showed if you have one unsatisfied customer, that one customer will tell 12 others, and each of them will tell 6 others. That adds up to 85 bad experiences that were shared because one person was dissatisfied. Now, out of those 85 experiences, 25% or 21 people won't buy. Those are lost sales. Well, how about you in your business? How much money are you possibly losing? Well, it's difficult to say. So let's take a look and see if we can get an idea of the impact customer attrition may be having on your business. Let's start with a simple math problem, the kind of thing you'll remember from 4th grade. Here's the question. You want to grow your customer base by 10%, but your attrition rate is 20%. How many new customers do you need? Well, the logical answer is 30%, right? We have to replace the 20% that we lost and pick up another 10% that we want for growth. That makes sense, at least initially. But let's take a closer look. Let's say that our business currently has 1,000 customers, and we want to grow that number by 10%, or build our customer base to 1,100. Remember that we've lost 20% of our customers, or 200, and that brings us to a new starting point of just 800 customers. So the actual number that we need is 300 customers. The 100 new customers that we need, plus the 200 that we lost, which is actually 37.5%, not the 30% that we originally thought we needed. Now let's suppose that our conversion rate, how many leads we actually close or convert into buying customers, is 20%. So in order to get those 300 customers, we're going to have to generate 1,500 leads. Now 1,500 leads at a 20% conversion rate will give us our 300 customers. Now let's suppose that it costs us $25 to generate a lead. Now it may be more or it may be less, but let's use $25 for our example. So $25 times 1,500 leads is going to cost us $37,500. Now remember, our conversion rate is 20%. So 20% of 1,500 leads gives us 300 customers. That tells us that each of the 300 customers that we end up with costs $125. That's $125 times 300, or $37,500. So each customer that you bring on board must be worth, in profits, $125. Now keep in mind, we only figured for our example that our lead cost was $25. If your lead cost is more than that, you'll have to consider that for your own calculations. The question you have to answer for your business is, can you make on average $125 for our example, or whatever the amount is for your business, on an initial sale? Or is it going to take you 2, 3, 4, or more sales to make that amount? Now we can't stop here. There's more that needs to be taken into consideration. So far, we've only calculated what it costs us to replace the customers we've lost. What we haven't figured into the equation is how much we've lost in sales and income from those lost customers. To do that, you'll need to determine how much your average customer spends with you on each transaction, how long on average those customers have not bought from you, and the number of sales they might have made during that time, coupled with how long it will take to replace them. Notice that we're talking averages here. Some customers will spend more than others, some will buy more often, some will have been lost longer than others, and some will take more time and effort to reclaim to get them buying from you again. Now, since it's impossible to determine the actual number in each category, the only thing we can work with are averages. It won't be totally accurate, but it will be better than nothing, and it can give us a general idea of what our costs can be. Okay, so now let's look at an example of what this might look like. Let's say, for illustration purposes, that our average sales transaction amount, how much on average people spend with us every time they buy, is $100. And let's say that our customers, on average, stopped doing business with us 6 months ago, and that they normally would buy twice a month, and that it would take 2 months to regain that customer. So our total lost income comes to $2,400. If we add that $2,400 to the $37,500 lead cost, we can see that the total cost to replace our lost income is $39,900. Now that's a lot of money. So again, another question you need to ask yourself is it more advantageous and cost-effective for you to keep a customer on board than it is for you to lose them and have to find another one? Sometimes all it takes is a phone call, a letter, an email, a short video, some type of communication to your customers to let them know that you know who they are, that you're thinking of them, that you appreciate their business. People just like to know that they're more than a number, a filled out blank on a form, an entry in someone's database, and that they and the money they spend with you is appreciated. So what about you and your business? What are you doing to ensure that your customers are happy, that they know they're appreciated, and they remain loyal to you and your business? What kind of customer retention program do you have in place? Do you have any kind of exit interview so when someone leaves or stops doing business with you, you can find out why or what happened and perhaps save the customer and the relationship? If you have these things in place, how are they working for you? If you don't have them, ask yourself why not. Now that you know how to calculate the cost of a lost customer and the value of keeping them on board and making repeated purchases from you, maybe it's time for you to put something together. When we work with companies, corporations, and businesses of all types and sizes, as well as with the consultants we train and support, this is one of the areas we spend quite a bit of time on. And the reason? Because the payoff for our clients, people like you, serious business owners, can enjoy immediate, impactful, and often very profitable results. Well, I hope all this makes sense to you and you can find a way to use this information in your business. If you have any questions or need help with this or any other area of business optimization, please don't hesitate to reach out and let us know. We'll be glad to spend whatever time you need to help you get the results you're looking for.